Hello, everybody. How's it going today? Hogue, how you doing?
I'm doing okay. Maybe mess something up here a little bit, but we'll get that figured out.
Yeah, I could explain that. Well, first off, yeah, I'm doing okay. I'm very congested, as is the way up here.
Oh no, oh no! Just
Yeah,
in time for the snow.
can't wait. And shoveling. So, yeah, we may have, there's good news and bad news. It's good news for everyone here because in some sort of Ready Player One Easter egg you all got here, I think we had a form problem in the email that we sent on Friday. So we will be recording this and we'll send it out to you guys in a landing page to YouTube format after the class is done. So probably not, so not today, but after the class. So we have today and tomorrow. And just to hit the other bases, if you guys have spent a lot of time with Topstep and Hogue in the past, or did all of Foundations or all of Trading Strategies, some of the stuff covered, especially today on the market profile, maybe a review, but it's important to review. You got to learn things several times before you get it. Hogue would agree with that, I think.
Yes,
Yeah, how long you been doing this?
I've been learning actively for 30 years.
Nice. So in a few seconds, I'll kick it over to Hogue. I will get off screen so I can blow my nose or do whatever. We also have John Doherty with us. He's off camera, but I assume he is here. Me and JD will be in the comments answering questions as we can. Also, if you have questions, oh, his camera is disabled. Very nice. Anyway, I assure you that John Doherty is there. We'll be answering questions. If you have any questions, feel free to put them in the Q&A. We'll try and get to them if we can in writing or having Hogue answer them live. So throw those in there as we go along. Feel free to yuck it up in the chats. Be kind, be nice. You can heckle us, but don't heckle each other. So with that, Hogue, I'm going to get off camera and let you do your thing. Have
Thank
fun,
you very
everyone.
much. Thank you very much, Jack. John, thanks for being here. And thanks to all of you for being here. I'm going to take my lovely picture off here and we're ready to get started. Again, I don't think that there's anybody here that actually signed up through the website, and that might be partially my issue. And we can always redo this webinar if need be. I have no problem doing that. I love talking to traders about trading. And Bob, I'm not sure if that's an issue with what you're doing or anything, but
We're good on our end, Hogue. The audio should be good.
Okay. All right. Good. Thank you. JD, sorry about that. I did not realize that I had you blocked out on the video. I always like to see your smiling face, as I'm sure everybody does. So, yes, as Jack's mentioned, if you've seen some of the previous webinars and some of the things that we've done, the first part, today's part, is largely going to be somewhat of a review for you. Tomorrow is going to be more important, where we really start to focus on the auction process, organizing the information from the auction process and starting to use the profiles to make good trading decisions. It's always about making good trading decisions, right? So that's really the goal. What are markets anyway but two-sided never-ending auction processes that occur in all infinite time frames? That sounds like a lot of fun, doesn't it? This is me. If you don't know me, my name is John Hoagland, the middle-aged performance coach here at Topstep. I much prefer middle-aged to senior, but I've got about 39 years of industry experience, not all of them actively trading, more like 30 years of actively trading, having traded on the floor of the Chicago Mercantile Exchange for 20 years, and then migrating to screen trading in 2009, which has been a challenge, as it is for everyone. And since about 2011, really, it's been my pleasure to have the opportunity to talk to traders from all over the world and to hopefully improve their knowledge and performance over time. So that's really the goal here, is to use is to take my experience and get you, into some things that have really helped me as a trader throughout my career. The purpose of this webinar, well, 2-day webinar series, is that trading is difficult. Period. There's no way around it. This is a difficult thing to do. A lot of folks joke and say, it's the hardest easy money you'll ever make. There is a tendency for traders to overcomplicate trading by seeking more and more information to aid. One second here. Okay. All right. There seems to be a tendency for traders to overcomplicate trading by seeking more and more information to aid in the decision-making process. Traders that are new to trading tend to have too many charts, too many indicators, too many trend lines, too many fibs, too many things going on their screens. While the content of this series may seem complicated, it is meant to help to create in you the ability to build muscle memory, allowing you to absorb certain information instantly or with greater ease while keeping your windshield simple and clear. If you've seen the market forecast, or the market prep, if you've seen the reflection, if you've been to some of the group coaching sessions, you'll probably notice that my charts are very simple and very clear and very uncluttered with a whole bunch of stuff. And that's really the goal. Whatever you use to view the market, or whatever lens you choose to view the market, my hope for this webinar, again, some of this you've seen, some of it tomorrow you may have not seen, is to help you see in depth, more with like 3 dimensions instead of 2 dimensions. Okay. Much of your ability to see is in your preparation and looking at more than just charts. I do not wish to complicate, only to enlighten and expand the amount of information you can digest with less effort, and to help you make the choices of what you use more clear. The preparation that I'm talking about, at the end of tomorrow's session, we're going to go over a worksheet, if you will, that I've put together, that I've given to many of my personal performance coaching clients on just a beginning to start you creating your outline of how you're going to do your homework. And then adding auction information to that, how it can help to start to create that 3-dimensional view of the markets that we're talking about. You're looking to become more of a holistic view of the markets. You're not always going to be right. You're not always going to be wrong. But in recognizing the health of the auction process as day traders, using the market profile or any other chart that you're going to be using, you're adding information that you're not going to be getting from those 2-dimensional charts, those flat charts. The charts are fine. They tell you what's happened. The auction information can tell you what's happened, and also how good of a job the market has been doing in that direction, or lack of direction thereof. Okay, so it's going to be a review for many of you. If you're new to the market profile, this, I think, is going to be important for you. This tool has been the single most important tool that has kept me in the markets and in trading for as long as I have. It is something that it was created in the probably the mid 80s by a gentleman by the name of Pete Stottlemyre. There have been a lot of great educators, including Jim Dalton, as far as the market profile information. As a matter of fact, Jim Dalton's book, Mind Over Markets is I still have my original copy. It is dirty, it is dog-eared, it has been read and used as reference over, well, 30 years, more like the last 10 since I've been trading on screen and not standing in the pit looking at a book. The market profile is just a different way to organize the auction process. It's a different way to organize the market's information that points out value, acceptance, and rejection of price over time. This is a picture of the profile graphic. To those that aren't aware of it, it just looks like, well, I don't know what all these letters are, and why is it fatter in the middle, and what does all this mean? We're going to go through that today. Like any analysis, the time and experience it takes to become proficient at it is equally proportionate to the amount of time you put into it, but it does take time. The one thing I do like about the market profile is there is information that becomes available in real time, where every other indicator that I know of is lagging. The information comes late. Many times the information that you're going to be able to glean from the profiles as you get to know them better and better and add the auction process to them is going to be largely contrary to popular opinion. When we watch the talking heads on TV and we listen to the experts, the economists, whatever, they may be saying one thing about the market, but in the profiles and using the auction process, you're going to be able to recognize, you know what, I think these guys are wrong. And it's going to offer you opportunities to limit risk. The market profile, Lisa, is the same as TPO in Tradeovate. Yes. Market profile, TPO charts, they're called TPO charts, and you're also, because you're going to see here in just a few minutes, the building blocks of profile. The market profile is based on bell curve theory. We know our good friend Jack is very big on bell curve, showing the concentration of acceptance through time and areas of rejection or little or no time. The market doesn't spend a lot of time up here or down here. It spends the most of its time here. How do we know? Because the variable in market profile or TPO profile is price. The constant is time. When visual things change in the profile, it can give you an indication of buyer or seller control, or whether the buyer or seller is winning, if you will. And it also tells you when a previous area of balance is now being rejected. So some of the building blocks of the market profile: the time, price, opportunity, the TPO, hence the TPO chart. Each letter or block is considered a TPO. It is a time and a price where an opportunity to execute was available. That's all it is. The point of control. The point of control is an important feature of the profile because it tells you where the mean is in the current range. The point of control is always going to be the widest line of TPOs horizontally that's closest to the center of the range. Again, that represents the mean. It is the most popular and fairest price of this profile graphic. It's the most popular and the fairest price. The market spent the most time here, indicating buyers and sellers were readily trading with each other for a long period of time at these levels. Does that mean it's a good place to trade? No, probably not. I'm looking more at the extremes for my opportunities. And you're going to see why here shortly. When we look at the profiles, whether they're volume profile or market profile or TPO charts, there's a feature called the value area. On this particular platform, the value area is represented, TPO value area is represented by this green line here. It represents where 70% of the time price has been in this area. So this price here is the low of value. This price here is the high of value. 70% of the time in this session was spent between these two prices, leaving 15% above and 15% below because the point of control is centrally located. The value area can move closer to one extreme or the other of the range based on the position of the point of control. The volume value is this blue line here. It tells us that 70% of the value, 70% of the volume in this balanced profile is between here and here, leaving 15% below and 15% above. The initial balance is something that Jim Dalton says isn't that solid anymore. He doesn't look at it that much, but I think it's a very important reference. The initial balance is the first hour of trade in any session. This profile is the S&Ps. The first hour was arranged from here to here. That is where the local traders in the pit used to look for the initial balance to see where two-sided trade was likely to occur. Opening range is this yellow bar right here. The market opens in the first minute, establishes the opening range. Now, there are many people who look at the opening range in different time frames. Some people look at a 30-second opening range. Some people look at a 5-minute opening range. There are traders that look at the initial balance as the opening range. Opening range is important, and we're going to find out as time goes on. There's some questions as to, I think, where we find it on TS Trader, and I'll show you at the end of the session here if we have time. Buying and selling tails. Buying and selling tails represent excess. As price got too expensive in C period here, which is the third 30-minute period, two TPOs were left at the extreme. This is a selling tail. Price is viewed as too expensive. Sellers came in and moved price lower. Okay, there are features of the profile. Sometimes when something is sticking out or doesn't really fit the bell curve, those can be called anomalies. And then there's also poor or unfinished highs and lows. We have a poor low here because there's a lack of excess. Now, all of this I know seems a little confusing here. So we're going to go a little bit deeper into these building blocks. Okay, number one, this little block up here, this little letter here is a TPO. It's a time price opportunity. It is a time and a price where an opportunity to execute was present. Okay, the opening range down here, the initial balance here. The initial balance, the first hour of any session. Value area here, point of control here, the fairest or most visited price. And then we have excess or rejection. A period was too cheap. Buyers took over and have not yet relented in this market. Now there's more nuances that we're going to be seeing here. This number 6 here, this is a weak high. There's no sign of excess. Only one little TPO sticking out the top there doesn't represent a situation where the market got too expensive and sellers quickly rejected it. Even though it's the high of the session, this is something that we want to pay attention to moving forward. A late spike. This is where the market the TPOs are color coded so we can see through time. Red is early in the session, yellow, green is in the middle part of the session, blue is at the end of the session. When price pushes outside of previous value or range at the end of the day, it creates a late spike. Those of you that are joining me for the market prep or the market reflection, we see these and it gives us good reference for possible opportunities on the ensuing day. Anomalies, anything that sticks out, this little TPO sticking out right here, it just overlaps the previous period, leaving one little TPO sticking out there. These are anomalies. When we see that the markets are as visual as they are through the profiles, one of the things about the profiles is you're going to be able to see truly how visual markets are. When there is a when there is something that draws the eyes of traders, traders tend to draw price to it. This is something we would be paying attention to moving forward. A naked point of control. What is a naked point of control? 10 here is the point of control. If the market moves away from there in the future session, this point of control will be basically an eyesore, something that brings traders' eyes to it and will likely be revisited at some point in the near future. How do we see these when we're looking at charts, when we're looking at open, high, low, close charts, candlestick charts? We're not going to see them. It's one of the things about the TPO chart or the market profile chart that we're not going to see in any other type of chart. And then sometimes you'll have the market come back to about halfway back or an afternoon pullback high or low. These are also nuances that we're going to be looking at. There are many other nuances. I don't want to get too complicated. These are mainly the ones that I'm going to focus on. And when we learn about the profiles, look at the profiles, do the homework about the markets and the profiles, we're going to be able to recognize these things without having to say, okay, where's the point of control? Well, it's here. It's got that little red caret on it. So that's the point of control. I know that. But if that red caret wasn't there, I would still know that the widest line of TPOs closest to the center of the line of the range is the point of control. And I would know what that means. So we're going to put together a profile right now. A period opens here. The range for A period is from this price to this price. Price is, for this example, not necessarily all that important. We just know that this is the high of A period. This is the low of B period, of A period. A period is the range for the first 30 minutes of trade, right? So no matter how many times the market rotates back and forth inside this range, only one TPO is represented. Remember, the variable is time. The variable is price. Geez. The constant is time. So every 30-minute range gets a TPO and only one, again, no matter how many times it rotates through that. At the end of A period, we know that the initial balance is the extremes of A period. B period opens up, trades to this price, and then extends the range below A period. It also expands the initial balance. The opening range is neither the high nor the low. We've expanded the initial balance. The point of control at the end of A period was here. When B period opened up, and it stayed there until the range extended in B period. You'll notice that B period is not kept in line. Everything is pushed to the left axis to create the profile, the profile graphic. So we've seen point of control move lower. This is a nuance that I pay attention to. So we've extended the range lower. We've moved the point of control lower. B period 30-minute range high here. B period 30-minute range low here, pushed over to the left axis. C period opens up, trades within 2 ticks of the low of B, leaving excess. C period trades within 4 ticks of the high of A, also excess. It doesn't extend the range at all, and the center of the range remains the widest line of TPO. So our point of control doesn't move at all. D period opens and ranges from here to here. Again, this is the fourth 30-minute period, and the entire range is designated 1 TPO per price, no matter how many times the market rotates through it. Point of control remains where it is because the center of the range is still the widest part of the profile. All right. So I'm going to go back here. We got to make sure we know where the point of control was. The point of control at this point was 2 ticks below the opening price. 1, 2, 3 ticks below the high of the opening range. E period opens up, doesn't rotate lower, but rotates higher, leaving the A period as an unfinished upside auction. There's no excess up here. What we also see is that here's the opening price. A couple of ticks below that was where the point of control was. And then point of control moves higher. So now it looks like we've got excess at the low. Price got too cheap and was rejected. Now we're seeing the point of control moving higher, indicating potential potential buyers winning the battle today. F period opens, trades to here, and moves the point of control yet 1 tick higher. G period opens up, so it takes a look to the downside below value, but doesn't take out the low here. We still have excess at the low. Point of control remains above the center of the range. H period from here to here can't take out the low. We still have excess at the low, low excess at the high. The point of control remains above the center because this is the widest line of TPOs closest to the center of the range. Remember, it was here. It moved up to here, moved up to here. It's moved up twice already. And we've got an unfinished upside auction. This is the finished profile. We had J period extend the range to the upside. I period, J period, K period, all higher lows. The point of control remains, actually moves up because of range extension. So you can see that the excess at the low and the fact that the market was kind of telling us that point of control is moving higher, buyers are in control and may win the war. They won the war. So when everything is pushed over to the left axis, this is what the profile looks like. If we keep everything in line on the market profile, in essence, we're looking at the very same thing as the 30-minute chart. We have A period opening here. It looks lower. It goes higher. It closes here. B period looks higher, looks lower, and closes here. C period opens here. You can just see how the information, when we split it out like this, is exactly the same. But with the profile looking with the bell curve, it gives a different bit of a view. Okay. I see there's lots of questions here, and we're going to get to them as we get closer to the end here. There's so much to learn from the market profiles. I've been looking at profiles pretty much since Mind Over Markets came out, and I think that was in 91, something like that, which was really kind of late. 93, which was really kind of late because people were already looking at the market profile through the lens of Pete Stottlemyre. There's a lot of really good questions here, and all of them are going to be right and all of them are going to be wrong at specific times based on context of the marketplace. Now, the market profile is a context tool. It is not a signal indicator. It is not a tool that's going to say buy here, sell there. It is a decision-making tool. Basically, what the market profile is the diffusion of innovation. Okay. When there is a new innovation, the first people to adapt that innovation are the innovators. They're the ones that say, hey, I like this. Let's say it's CD players. When CD players came out in 1982, they were really expensive. The first people who bought them had the longest enjoyment of them. The early adopters are the next ones in. Early majority, you get up to the top of the bell curve. The late majority, fewer and fewer are coming in, and the laggards are the last ones to assimilate or accept the innovation. If you look at it through the profiles, in two-sided trade, you can look at the buyers at the low as the innovators and the buyers at the top as the laggards. And the opposite is true. If we're looking at the sellers at the top are innovators, where the laggard buyers are, the innovator sellers are selling. The early adopters can still make money. We're still largely above value. Early majority, late majority, we're getting less and less opportunity to profit. And finally, the laggard sellers are the ones selling it in the hole. So there's the value area is essentially containing the early and late majority. It's probably not the best place to trade in many instances. It's early adopters or innovators that are going to have the best trade locations for the move to the upside. The innovators are also going to have the best trade location for the move to the downside. And the laggards are going to be the ones that are the last ones in. Many fear-based retail traders end up consistently being the laggards and rarely become the innovators. Using the profile graphic and the auction process, you may find, hopefully, over time, with that three-dimensional view that you're looking at the market, that you're able to be an innovator or an early adopter more often. Jim Dalton says it best. If you're waiting for confirmation, it's going to cost you in trade location. The innovators down here had the biggest profit on the way up. The early adopters had some. Early majority, late majority had the least of possible profit opportunity, and the ones that bought the highs are taking losses for sure. The innovators at the high here, the sellers were the ones that had the best trade location. And then you see the early adopters, early majorities, late majority, and the laggards here. When we're looking at the profile graphic, after what we've just discussed, in a range-bound day, wouldn't you think that the middle of the range, inside value, would be your poorest opportunity to take a trade? If you're catching the extremes, there's not a lot of time to act here. You only get 2 TPOs down here with which to execute. Same as up here. C period high, the laggards bought it up there, but the innovators sold it, and they got the best trade location for shorts in the day. Think about this. If the value area represents 70% of the time, and there is no further range extension on a day like this, 15% of the time is spent above value. That makes it an 85% probability of a short above value, again, with no range extension. 85% of the time, you're going to have the opportunity to take a profit on a short above value back inside value. A 15% of the time has been spent below value with no range extension. 85% of the time, a long below value statistically has the opportunity to take a profit back inside value. Notice I just said back inside value. A long down here may only come up to point of control, and it can turn around and head the other direction. A short up here has the opportunity to get it to execute a profit back inside value. There's no guarantee that price is going to come back to point of control or a full rotation to the low of value. Okay. Now in a trend day, you're only going to have one opportunity to be an innovator. If you recognize that this is going to be the low, the early adopters will be here. The early majority inside value, they're still going to have the opportunity to profit, but the late majority has less opportunity to profit. And the laggards, the ones that are buying at the high, are basically doing just that. They're buying at the high. Okay. There are different day types when it comes to the market profile. This is basic stuff, but it's a lot of information. Please, every 2 days a week, we have group coaching, 12 o'clock on Monday and Wednesdays. Today is basically group coaching time. But if you have questions, write them down. Come to group coaching. I can't talk about this stuff enough, and I think it's so important for traders to understand it that I will repeat it as long as I have to repeat it. It doesn't matter. Ask the questions. We're not going to get that much time today in this webinar, but you always have that opportunity to come to group coaching to ask questions, challenge me. Nobody knows everything. I certainly don't know everything. If there's something I don't know, I'm going to tell you. I'm not going to cheese it. But we have opportunities to talk about this stuff 2 days a week during group coaching. We can even talk about it during Make Hogue Money, which we have Make Hogue Money at 2 o'clock today. Okay. So different day types. There's non-trend, normal days, normal variation, neutral center, normal variation, extreme, double distribution, trend days, days of imbalance. I'm going to start with some of the more severe days that fall out of or are out of balance. The double distribution trend day. The early morning range is here. Something changes. The value of the perception of value changes, and price is driven lower to a new area of balance. This is called a double distribution trend day. Balance, excess, balance. These types of days usually occur when there is an economic announcement or something changes the marketplace. Sometimes we don't know what's coming out. A trend day usually begins at one extreme and ends at the other extreme. This is a pretty decent view of a trend day. The market does start to range here, but there's very emotional buyers jumping over each other all day long, trying to get in, or they get into longs or out of shorts. And the day ends at the very high, begins at the very low, ends at the very high. This is an emotional trend day. Now where did my, I skipped this. Sorry about that. I guess I just skipped this slide. A normal day is a day where the initial balance is not extended on either side. Think yesterday we had a normal trading day in the NASDAQ. The first hour of trade enveloped the entire day's range. Now, if the range is big enough, you can treat these days like a cash register. A period is the entire initial balance. B period comes up within 2 ticks of A period and doesn't extend the range. If I take a short up here, I can risk just a few ticks. And the market rotates all the way back down to the lows, which can't take out the initial balance low. If I'm a buyer down here, I can take this market all the way back up. Well, it doesn't really get there in the middle of the day, but it gets here late in the day and comes back to point of control. If you see a normal day and you assume a normal day, your strategy is as simple as sell against the highs, buy against the lows. If the range is extended at all, there's your hint. Maybe the market isn't ready to go. Maybe the market has got other ideas. The non-trend day is similar to a normal day. There's sometimes an extension outside the initial balance that does not bring continuation. A non-trend day is any day that has just a very narrow range. A non-trend day is typical before an important economic release the next day. So we did the double distribution trend day. We did the trend day. The normal days or normal extreme, normal variation days. This should say normal variation extreme. It's a variation of a normal trading day in that it's not a trend day or a double distribution trend day. The extreme means that the point of control is at one extreme of the profile or another. A neutral center or a normal neutral center day is a day that really just extends the range on one side, but falls into balance with a very even bell curve. A neutral extreme day can be a long liquidation trend day, a long liquidation type of day. The B shape gives it a long liquidation. It can also be indicative of sellers continuing to win because your point of control moves from here all the way to here, all the way to here, and all the way to here. Value moves lower, point of control moves lower. There's information in that. We have excess at the high, excess at the low. Low excess, low here, excess at the high. When I see a neutral center, normal neutral center day, it usually represents the fact that the market did a good job of using up its ability to facilitate trade. I look for change after days like this. In which period would you say a trend would be set? A trend day in profile is higher lows, higher highs, higher lows, higher highs, higher lows. We also call that one time framing. A trend in the opposite direction would be lower highs and lower lows, lower highs, lower lows, lower highs, lower lows. One time framing is trending. This is a true poor high. You have C period high. D period comes and takes one little step above. This is a true unfinished upside auction. Okay. There's no excess here. And as a matter of fact, I kind of view this as a bunch of kids standing around a pool wondering if it's too cold. One kid sticks in his toe and says, yeah, it's too cold still. Let's come back later. This unfinished upside auction is likely to be revisited soon. So the question really is, when it comes to the profile, the auction process, because these markets are all auctions, the question is the market doing a good job facilitating trade? Is it doing a good job? What is it attempting to do? How good of a job is it doing getting there? Time, volume, value, open interest, price action, confidence, conviction, direction are all features of the auction process, many of which we're going to be discussing tomorrow. The thing about market profile or any tool that you're using is you're always going to have cognitive dissonance. Cognitive dissonance is the state of having inconsistent thoughts, beliefs, or attitudes, especially as relating to behavioral decisions and attitude change. One of the best things that I've learned more since I started trading on screen was the importance of understanding the auction process. Markets are markets, they're auctions. If we understand them more, we're going to be able to give ourselves less cognitive dissonance more often. Cognitive dissonance is always a part of trading. There's information that says price might go higher. There's also information that says price might go lower. If you understand the nuances of the profile and the health of the auction that the market is currently in, the context, you can gain more confidence in being in positions or getting into positions or managing risk. Visual learners tend to do very well with market profile, and I find most people identify themselves as visual learners. If somebody shows me something in a picture, I'm likely to learn it better than by reading it. So you want to be noticing things that don't fit. Sensing when something is wrong or unusual can be the nuance for good trades or even trades to stay away from. The market profile is more than a set of rules. It takes market knowledge, even more importantly, self-knowledge. We are going to be doing, I'm sure, a webinar in the first half of the year here about self-knowledge, about my experience with trading psychologists and some of the things that I dealt with, and some good ideas on how to get to know yourself better. We've got so much here at Topstep. We've got Jared Tendler. We've got old recordings from Dr. Andrew Menaker. There's so much I'm going to share you with my experience with thinking about self-knowledge. All of this, we're looking for it to become secondary functions so we don't have to think too much. We got to focus on what we're seeing in the markets, but we want the features of the profile that we're seeing in the auction features to become secondary functions, to be able to bring that whole picture together into one picture, if you will. We're always going to be challenging the rules. One of the first things that we say is, if you are part of the herd, you're the wrong way. 90% of traders are not going to make money. Jared Tendler says that. Been listening to Tom Hugard's book, The Best Loser Wins. If we're doing what they're doing, we're going to end up with their results. Adding the auction process to your already good knowledge of technical analysis, or if it be market profile, is going to be one of the most important things to be able to recognize, you know what, the whole herd is this way. This doesn't look right. And you've got to be able to stand on your own and look the opposite way. What we're looking for is that holistic picture. A holistic picture is characterized by the comprehension of the parts of something as intimately interconnected and explicable only by reference to the whole. So you take all this information, you take it in chunks and grind it into one picture, and that picture should be a picture of the whole picture being greater than the sum of its parts, if that makes sense. Tomorrow, the auction process. I view the auction as kind of a four-legged table. Volume is part of the auction, open interest, the number of contracts outstanding, structure and time are going to be very important to the assumption of a healthy auction or an unhealthy auction, and price action, order flow, momentum. All four of these legs need to be understood in order to be able to use auction process in your trading You take out one of these legs and the table's going to fall over. Is neutral center a ranging day? Yes. So I'm going to go in, I'm going to start here at the bottom and go through as many of these questions as I can. Steve Nadeau, how are you? It's good to see you. I just saw that one. The opening range start for crude, 8 a.m. Central. S&Ps, 8:30 a.m. Central. Currencies, treasuries, gold, 7:20 a.m. Central. Daniel, opening range to me is 1 minute of the regular trading hour open. Is market profile on NinjaTrader? It is not, but there are add-ons. Go to fin-alg.com. It's an add-on to it. I think they give you a week to try it out for free, but there is a cost to that. Okay. Can you talk about volume profiles tomorrow? Well, tomorrow we're going to be talking a lot about volume, but not specifically about volume profiles. Daniel, I'm going to put that in my bag here, and we'll work on talking more about volume profiles in the future here. Okay. There is no cost for the market profiles on Trade Evade. Vincent, at what point can you determine what type of trading day it is? How many 30-minute TPOs in? That's a great question. The earlier you can determine what kind of trading day you're going to have, the quicker you're going to be able to find the right strategy to trade. It's very difficult to do that. Like yesterday in the NASDAQ, would I have bet that it was going to be a normal trading day? No. Did it end up being that? Yes. But if it remains that way at some point in the day and you get an opportunity at the extreme, you got to take that extreme. There are some days when I'm confident that I've got the day type nailed early and I can trade to that. There are other days when it's very difficult. So that's actually in the book Mind Over Markets, Vincent, is the sooner you can determine the day type, the better the faster you're going to be able to apply that strategy. But it's not easy. Not easy. Would you advise to split time periods on the profile for newbies? At first, no. At first, no. Daniel's got a bunch of free indicators for NT8 in the webinar chat. Thank you very much for doing that, Daniel. I'm going to try and work my way up here. What's the difference between poor or weak, high or low? A poor high or a poor low has one tick extension outside of the previous range. It's the kids sticking their toe in the pool and coming back later. A weak high is even or exact to a previous high or low. So you get two TPOs right next to each other. That's a weak high. It's semantics, really. No, Ron, when I was talking about back inside value, I was talking about price back in today's value area. Today's value area is of no use. It depends on the day type. If you're range bound, outside value is the only place I want to take a trade. How many ticks should each TPO be? Good question, Austin. In the S&Ps, I go tick for tick. In the NASDAQ, the profile gets very, very long because there's so many ticks in the range in the NASDAQ. So I go four tick TPOs in the NASDAQ. It depends on the product that you're looking at, right? John. Wait, Jerry, three-dimensional to use VSA also. I'm not sure what VSA is. So probably not.
Volume spread analysis, I think.
Oh, no. Thank you, Jack. Does TPO show or imply demand and imbalance of demand? Yes. Yeah. A previous prominent point of control can indicate, well, a previous prominent point of control above can indicate supply. A previous naked point of control below can imply demand. John Harris, I use EMA and try to sell when the market is at the weekly or daily high and the EMA is in that range. How can I use market profile to improve this on this edge? And by when is it at those levels and crosses the EMA? Also use open, high, low to define the range. Jack, you were going to answer this?
Oh, I just pegged it because the first question that came in as to we get something we can talk about live.
Okay. So John, the EMA, that you're using, I would use it in conjunction with the profile. If the profile agrees, if price comes up to that EMA and we're at the high of value, or we are at the high of a balance area, or a naked point of control that the market had just gotten to, those would be certainly areas where I would be interested in looking for a trade, because you got the EMA and you got the profile, which are unrelated tools telling you the same thing. That's what I would look for in that regard.
You can come back on camera too, Hogue. Everyone can see our faces as we scan through questions.
All right.
Howdy.
Hey, how you doing?
How
are we doing?
Still sniffing. I think we're doing pretty well. Just a few more questions left. I think we can get to them, and then we'll get bright and early for tomorrow at 12:30.
There you go. All right. Well, Jerry's question, do you use VWAP? It is something that I have kind of added to my quiver, because if you've been to Mako Money, my brother joins me and he's big into VWAP. Can you spot fake reversals with market profile? A range extension that fails and comes back into range can be a fake reversal. Well, it'd be a fake continuation. Can you spot fake reversals with market? I'm kind of wondering about what time frame you're talking about there, Khalid. On the daily time frame, 30-minute time frame. Alan mentioned the fourth leg is partly momentum. How do you determine momentum from the profile chart? That is something that I use in conjunction with open interest and price action. I'm hoping tomorrow is going to answer that question. Let me know if it doesn't, however.
Hogue, did you get to the question about is the market profile the same as the volume profile?
I did not, and they are different. Here, what I'd like to do is I'm going to okay. Maybe I'll use the TS Trader platform. Hang on a second here. Okay, so here's the E-mini S&Ps, here's the TPO charts, and I can smush these down so we can see them. So the volume profile is good in itself, and I use the volume profile in very short time frame opportunities to try and get into trends that are already underway. The thing about the volume profile is you don't get the same amount of detail. Okay, you can see that there's a little bit of volume down here, but you don't necessarily see that as excess the same way you do in the volume in the market profile. you can see that there's still some volume up here, and I can't tell if this is excess up here or not. Okay, we just talked about the naked point of control being a potential target. Well, look where the price just got to in the S&Ps. This is the volume point of control from yesterday's session. This is the TPO point of control right here from yesterday's session. It also happens to be an anomaly. So price targeted this visually because traders were looking at it. Excess, some little toothiness here. This is a lack of confidence. And now we've got almost a double distribution trend day going here. I lost what the question was.
Oh, it was about a volume profile and market profile.
Oh yeah, that's right. That's right.
There's another one I'd like to say too. We've seen a lot of questions about on specific platforms, how you get the market profile or stuff like that. I was going to say that you might have to Google around or Bing if you're a contrarian, because we're maybe not the best people to ask about all the different platforms.
What I can tell you is if you do have TS Trader, you're going to want to grab not the legacy chart, the chart, bring it out. Okay, here it is. So we're going to go ES. It's probably going to go straight to the TPO chart. Okay, went straight to the TPO chart. If it does not, you go to the chart type. If this was candlesticks, like I was hoping it would come up as, you go to the chart type and go to TPO. Now you got your TPO charts. There will be some adjustment needed so you can make them look like mine with the colors and the different time frames of regular trading hour versus extended trading hours. And I will be happy to show you that next week in group coaching. And I know there were a couple of questions on how to get into group coaching. I'm going to get to, oops, hang on.
Get to the link. I think in case anyone's watching this later on YouTube or something where it's harder to click the link, if you just go to the Topstep website under coaching or something like that, it should be pretty, even if you just Google Topstep free coaching, it should take you pretty easily to the page where you can register for, we do twice a week free group coaching on Zoom, right? Which, what are the days and times on those, Hogue?
Mondays and Wednesdays at 12:30 Central.
Yeah, so stop on by if you've any individual questions. Those are usually a little bit smaller crowd than this, so especially if you have super individual stuff, that's good. I mentioned that we're also starting some coaching opportunities on Discord, which you should join, by the way. I think there's a lot of people on it now. Bounce all sorts of ideas off there, and we're going to have some sessions there as well.
Awesome. Tom, if you don't see that TPO chart, you got to make sure not to get the legacy chart, just chart. Okay.
Yeah, I think it's time to wrap up for now. We'll be back tomorrow at 12:30 for the second part of this, so please join us. And I shared a few times the Zoom registration. Apologies again if you had difficulty getting in here. It's sometimes an issue for us, but we try our best and get better each time. So
well, I think that may have been on me. I'm not sure. Well, I'll take it though.
That's why you have 39 years of trading experience and not 39 years of email automation.
Right. Right.
Which would not be great. Well, cool, Hogue. Well, I'll let you sign off.
All right. Well, thanks, Jack. Thanks, John. Thank you, everybody, for joining me today. I really hope that today was useful and that there was at least something you can take forward with you. Tomorrow, I'm pretty sure we're going to have something for you to take forward with you, but definitely come tomorrow for the discussion about the auction process. Some of you are going to have seen some of this if you come to group coaching. Many of you have probably not, and I'll look forward to seeing any and all of you tomorrow. And then, of course, always welcome in group coaching. Have a great rest of the day. We'll be in Make Hogue Money in here in about 25 minutes. And then I'll see you at the end of the day for the market reflection as well. So see you later, or maybe see you tomorrow. Have a great rest of the day.